Corner Insider Strategy Session. I'm your host, as always, Director of Research here at All Star Charts. I'm Steve Strazza. Let's jump right in, get this disclaimer out of the way. Nothing we discuss here today constitutes any solicitation to buy or sell any security. This is solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, go to allstarcharts.com/terms. Well, I'm obviously going to start here because Friday is a very big day and I won't talk to you guys until next Wednesday, sadly. What is Friday? What are we celebrating? Well, definitely tune into the morning show on Friday because we got a special surprise, special episode celebrating the 1-year anniversary of the bear market bottom. June 16th was that date. It's been 1 year. Now, I was talking to the guys as we're putting together some stuff for this for Friday, and I said, it's not exactly the 1-year anniversary of a new bull market, is it? It's more about the 1-year anniversary of the end of the old bear market. It's kind of what we're talking about internally, nerdy stuff. Is the end of a bear market the same as the beginning of a new bull market? I don't know. We'll talk about it more on Friday. The point is, it's been 12 months now since the majority of stocks made their ultimate cycle low last year. And boy, the indexes are really celebrating this week, rocking higher. Here's the S&P 500. Everybody had their eyes on this 4,200 level in the S&P, the second rectangle or resistance line here. I think it was really 4,300 though. At least that's where the confirmation was for me, right? So it's not just the August highs, which are just huge, right? But it's also the 62% retracement of the drawdown during 2022. One thing we know and why we use these Fibonacci retracement numbers is that once you get 62%, you're very likely to get the full 100% retracement, right? And the same is true for 38. Once you get 38, you're likely to get 62. This is why that level is so important. And then when you get 62, you're likely to get 100. Sure, anything could happen. But for us, the next line of resistance here is the all-time highs. And if you look at the best stocks in the S&P 500, a lot of these mega cap growth stocks already making new all-time highs. Nvidia, Apple, right? List is growing. We'll get there in a minute. Talked about rotation last week. Looking for small caps, maybe, experience some amount of outperformance that lasts more than, a week. We saw it about 2 weeks ago. We're giving a little bit back today. But, the more important thing here about the past few weeks is really shown in this bubble chart here. We're illustrating the rotation, but I think the more important part, let's talk about real quick what's on these axes, right? So the year-to-date change is shown here along the x-axis, right? You could see the big winners this year, large cap growth. You got, your sectors, your tech sector spider, your communication sector spider, each up, 30, 40% on the year. And then you have your energy and your financials actually lower on the year. Along the y-axis here, vertical axis, we have the 2-week performance of a select group of sectors, small cap sectors and large cap sectors. So over the last 2 weeks, it's small cap energy and small cap financials that are actually leading, up 9%. Small cap materials too. The bigger takeaway is less about who's leading over the past 2 weeks and more about the fact that everything on this bubble chart here is higher, is above this horizontal axis here, right? The 2-week performance for everything is in the green. So yes, maybe small caps are giving back a little bit, but that's more because large caps have been so strong. Look at the S&P 500 since last week. Like we gap higher every morning. So again, when your benchmark is the S&P 500 or any of these large cap indexes, it is going to be hard to beat. It's not so much that small caps are, underperforming or not participating. They are very much participating. We're seeing, a lot of improvement there in absolute terms. Maybe the relative strength comes in the future, but for now, let's just be realistic about where we came from. This is definitely a move in the right direction, right, for the broader market. Getting a little bit of this rotation into small caps and things like industrials. In fact, I did not bring the chart along, but it is on my Twitter. Small cap industrials are like 2.5% from new all-time highs. Small cap industrials, basically making new all-time highs at the index level. Risk appetite, we got to talk about this. So what do we know about bull markets? Well, from an intermarket or, intersector perspective, we know that discretionary stocks, consumer discretionary stocks, tend to outperform or go up at a faster rate than consumer staple stocks. That's what we're showing here. XLY versus XLP. This is large cap discretionary versus large cap staples. It's a risk on, risk off indicator, right? We have the offense in the numerator, risk on assets, your discretionary stocks, and then we have the defense in the denominator, your risk off assets, your consumer staple stocks. I think I said that right. Been talking a lot today. Anyway, new 52-week highs in this, risk appetite ratio supports the new highs we're seeing at the index level from the S&P 500, right? These charts look rather similar. Taking out their August highs, completing a base, this is the kind of intermarket support or, supporting evidence or confirmation that we want to see. What's another one? Same exact story here. What else do we know about bull markets? High beta stocks, or again, riskier stocks, tend to outperform their less risky alternatives. High beta, risk, low volatility, defense, SPHB versus SPLV gives us another really nice indicator or measure of risk appetite among equity market participants. In this case, again, new 52-week highs, high beta stocks really outperforming low volatility, and this ratio has moved in a straight line higher over the past month and a half now, right? So that's telling us that investors are repositioning and moving further out on the risk curve, right? Taking on more and more risk, increasing their exposure to risk. Behavior of a bull market. So what are we going to do about it? How do we handle this? An environment where investors are embracing risk, right? Putting on riskier and riskier positions. We want to buy the best stocks, always. We want to buy the strongest groups, the strongest stocks within the strongest groups. We made a nice little criteria for how we're defining the best bearish to bullish reversal patterns. The best rounding bottoms, we have made criteria, a list of 4 characteristics that we are looking for. And then we went and we ran those criteria and every stock in the S&P 500 individually, and we came back with 27%, almost 140 components check all 4 of these boxes, telling us that the trend is now higher, right? These 4 characteristics, we could check every one of them off. We are confident that that issue or that stock is in a new uptrend now, right? That's what a rounding bottom is, what a bearish to bullish reversal pattern is, right? It tells us that the trend is no longer sideways, it's now up. So we've created a list of characteristics that tell us we have a completed base here. Now the path of least resistance is higher. What I don't like about this, really it's the green line here. Sorry about the spaghetti chart here. We're going to clean this up for next week. But the green line really in the lower pane here is telling you the percentage of S&P 500 stocks that check all 4 of these boxes. 200-day is sloped up. The 200-day on the relative trend is sloped up. This tells us the absolute and relative trends are now higher. Momentum is in a bullish regime. Tells us buyers are more aggressive, getting more aggressive. And we're above the August highs, right? We have a clear resistance level that we know we're above. Back in Q1, more stocks, over 30% of the S&P 500 components checked all 4 of these boxes. That number is lower today. I don't love to see that, right? We really want to see, the amount of stocks that are completing bases be higher than it was back in Q1. The index is higher. I want to see that confirmation. That's what we're looking for. In the meantime, we can continue to buy the best stocks and give the rest of the market the benefit of the doubt. In bear markets, rallies are guilty until proven innocent. In bull markets, rallies are innocent until proven guilty. Right? Sometimes momentum needs a chance to catch up. We were talking just last week about, man, the S&P 500 hasn't been overbought in, I think since last year. We didn't love that. Well, look at it this week, right? Wasn't confirming the new highs last week. Got that confirmation from momentum now this week. You have to be patient. Let's talk about some of the best bases. Uber is a great example. I marked up a couple of charts here today, to really, really just hammer home what we're looking for from these reversal patterns. Right, so here's Uber. I need new levels for Uber. Hold on one second. So Uber is a great example. The reversal is already been completed. And just look at this, steady uptrend here now. Higher highs, higher lows, higher highs, higher lows. And we're just consolidating constructively along the way, keep gapping out of these little continuation patterns, getting into the next one. And then it's go time. So we're looking for another leg up in Uber. Let's talk about these characteristics real quick. 200-day is sloped up, telling us that the primary trend in absolute terms is now higher. Momentum is in a bullish regime. In other words, momentum is consistently hitting overbought readings on rallies and not hitting oversold readings on corrections. Right? See it here over and over and over again since last year now. The relative trend is up. 200-day moving average sloping higher on a relative basis. This is Uber relative to the S&P 500. You can see completing a similar base versus the S&P 500. 200-day moving average sloping up. And now prices above those August highs. We had a clear little level in the sand here. Clear little resistance level where we could say, okay, the base is completed if we're above these August highs. Checks all the boxes. For something like Uber, we're breaking out of this bull flag recently, last week really. I think you can, buy this one around 40. I want to call it 40. This bull flag resolution is a valid one, and the path of least resistance now higher over the short term, probably get a fresh leg up. So this is just a new level for Uber. So let's be buyers above 40 with a first target of 45 and then a secondary target back at the all-time highs. Right? I think we currently have an open trade on it with a target of 45. That's not going to give you much more than 10% here. So I think we're really targeting back at those all-time highs around 64 at this point, not shown in the chart, but above 40, longer-term target is 64. Corsair, one reminds me of DraftKings. DraftKings, not long ago looked very similar. Textbook retest after breaking out of the base gave us a really nice opportunity to get into it. If we missed the initial base breakout, Corsair looks really similar here to me. 1850 is that level, right? And again, primary trend is up, 200-day moving average sloping higher. Look at how clean of a level we have here. This shelf of former highs, right? Last summer, Q4 of last year, twice on a year-to-date basis, 1850. The market just continues to tell us time and time again, this is an important level, right? So we want to use this polarity zone, this well-tested level of, former support, now turned resistance, now turned support again, 1850. If we're above there, we like Corsair long, giving you a really nice entry here today. Stock is currently trading at 1863. Again, holding this level. If you just look at the candle since last Thursday, 1, 2, 3, 4 tests. On an intraday basis, if I were to zoom in on this chart, we just keep on hammering this 1850 level and holding, bouncing off of it intraday. So this is a great place to enter here. 1850, target 24 in Corsair. And again, look at the relative trend and momentum. Bullish regime, new uptrend on a relative basis. SoFi, we keep getting asked about this one. Look, it checks all the boxes now. 200-day, yeah, it's pretty much there. I'd like to see it a little flatter. August highs, year-to-date highs, above them, 850 is the level. Go time. Anthony Noto, the CFO or CEO, old CFO of Twitter. He's the CEO. I think he's like the founder of SoFi. Very active buyer in this stock. Joby Aviation. This is like the that commercial helicopter company, or they're trying to be a commercial helicopter company. They like drive you to the airport and like on short plane rides, I guess. So this is a helicopter company supposed to be launching like their operation in 2024. I was just reading about it quickly before this. Joby Aviation looks like they SPAC'd in 2021. CEO out here buying stock last summer. And look, another really clean base here. We got the Q1 high or Q2 highs from last year, the August highs from last year, just took them out with authority. Look at Joby today. Everything from airlines to Boeing to anything in the air services industry has just been ripping. Airports, these stocks have been so hot. I was looking at Delta today. Just a fun fact, guys. Going on 14 consecutive up days, Delta Airlines. So I'm sorry, I'm just tangent to another airline stock or another aviation stock. Delta Airlines, I think it's the largest. Let's double check that. Largest airline? Yeah, easily. 25, 26 billion. So Delta Airlines, 14 consecutive up days if it closes positive here today. Best in, the history of the stock. I think the other streak would have been 2009, 10. Beat its win streak, consecutive win streak, daily win streak by 4 days. Just more evidence of the relentless bid for stocks, and not just tech stocks, over the past few weeks, right? That's 3 straight weeks. Delta hasn't been lower now. So yeah, aviation, Joby, looks good, nice base. In fact, this one looks better than any of the airline stocks in my opinion. So Joby, I do like it. Let's be buyers from 715 with price target of 10. Belden, BDC. Sounds like an industrial. Just looking up what this company did. Yeah, electrical products. Okay. Transmission solutions. All right. So trading around 95, you have, prior cycle highs here from looks like 2015. We tested this level once already, just earlier this year. Yep, back in February. So 95 looks like we're breaking through here now. We're trading about 95.50 today. So this one's triggering as we speak. Form 4 buyer, about $500,000 this time last year. If we're above 95, target of 138. Looking good. Samsara IoT. This is a software stock. IPO'd looks like late 2021, early 22. Yep, late 21. We're, making new all-time highs. Taking out those, just right after IPO highs here from early 2022. Remember, that's when the broader market peaked too, right? So then, experienced a drawdown just like everything else, bottomed down here around, April, June, and then again put in a double bottom in the fall, just like we saw from a lot of the indexes. Now made its way all the way back, really more than tripling since the lows last fall. We're above these all-time highs. This is a nice place to define our risk, get long for another leg up. 31.25 is that level. Target of 45 and change. We got an institution in this one, Green Oaks Capital Partners. They have a passive stake of about 13%. Stevanato Group. What do these guys do? STVN. Yeah, medical specialties. Medical supplies. Provision of drug containment, drug delivery, and diagnostic solutions to the pharmaceutical, biotech, and health sciences industry, life sciences industry. Okay. Copeland Capital Management is in this one, another passive stake, about 6%. We're above 29.13. It looks kind of similar to this base in IoT we were just talking about. It's less extended though. I kind of like it more. It has this little coil here. Wow, IoT's really ran. Probably needs a breather, deserves a breather here at least. This is, a nice little tight coil right at the upper bounds. Now we're getting that, it's like a forceful resolution up by another 2.5% today, getting overbought as confirmation. Momentum is not shown in this chart, but I'm looking along here. We're above 29. Like this one a lot. This and IoT, they look good. Again, if I had to pick one, I'm picking STVN. So above 29, call 39 target. That's the first fib extension there. Adobe Inc. Earnings tomorrow, I believe. The stock has really run into earnings. So don't go rushing into this one today. And look, it might run from us with the way these stocks have been reacting to earnings, especially these tech stocks or anything in the AI space. Analysts are going to be listening, big for an update on Photoshop, doing some big things with AI and their Photoshop kind of software, which seems super cool if you've seen the videos on the internet. So that'll be, I think, tonight or tomorrow, Adobe. If we get weakness on the earnings report, you buy it back towards 467. I would even say, the August highs, so 445, right? That's this level right here. So this should be a thicker line drawn between 445 and 467. You get weakness on earnings, you could buy back to there. If this thing goes on earnings and really leaves the station, then oh well, that tells us it's definitely a valid upside resolution, and we can look to get in here at our next risk level, which is about 600. And that's it. That's how you want to play that. Be patient, be disciplined. Don't go rush into this before earnings. We have our levels outlined. It looks like the reversal is on and a new uptrend is underway. Let's just give it time and see where it's going to pick as its next direction over the short term. Fluence Energy, just want to go over a couple that we talked about for the first time last week. Now we had some really nice bases, new setups last week. Also, just let's reiterate some of them quick. These, really, really just solid reversal patterns keep coming across our desk. Here's Fluence taking out the 62%. Remember, just like we said about the S&P 500, once you get 62, you usually get 100. So the levels here for that would be above 26.35, target 39.50, the all-time highs. Who knew? Energy stocks making new highs? Huh. Not seeing much of that these days. So it's called Fluence Energy, technically not an energy stock. Electrical products. Energy storage products and services. Artificial intelligence enabled digital applications for renewables and storage. Offers delivery and recurring operational services, as well as financing structuring services, such as energy storage as a service. Okay. Grid stack, sun stack, edge stack. Very young company, founded in 2021 in Arlington, Virginia. Yeah, that's interesting. Look, everybody wants to be an AI company these days. Whether or not this little bit about artificial intelligence was in their company description a few months ago, who knows? But I have a feeling it probably was. If these guys just IPO'd in 2021, but look out for that. You'll see mentions of AI more and more on company websites, and company descriptions, on company about pages. Obviously, hearing more about AI on earnings calls, regardless of whether or not the companies actually do AI things. So, be careful. Confluent, CFLT, Altimeter Capital. Talked about this one last week. Really nice base, really clean. August highs are 34. First target's 46.40. I think Brad Gerstner's Altimeter Capital was out here buying this one last year. PGT Innovations, higher cycle highs. Looks like a lot of things, right? Tell this is an industrial. PGTI. See what they are. Producer manufacturing building products. Yeah, 1.6 billion. So again, we like these industrial names. Industrials are really the place. They're outperforming any of the other value or cyclical groups on a sector basis, at least. And this one's also a small cap, so it checks two boxes for us, right? If we're getting that rotation in small caps, it's really the small cap industrials, like I talked about. The index, 2% off all-time highs. The small cap index is going to break out, or small cap industrials index is going to break out. The strongest small cap industrial stocks are probably going to experience a nice leg up and also break out. That's what the logic or rationale behind a long idea in PGTI would be. So Form 4 filer last November. We have really clean level here at the 2018 and 2021 highs. 26.40 if we're above there. Target 38.40, and we're trading around 27 today. Looks like the stock's giving a little bit back here. So I would just watch this little flag on a short-term basis. 26.50 is really the upper bounds of it. Lines up very nicely with these old highs. GXO Logistics. Kind of missed it for now. Want to be buying this one closer to those August highs. Year-to-date highs around 54, right? Or Q1 highs, 54, 55 level. You also have the IPO day low here, or day after IPO day low. So 55, big level. This one is a buy on weakness setup at this point. Up again today. Nice, trading around 62 today. Just wanted to bring it along because, again, it's one of the nicest bases we have right now. Ares Management Corp, ARES. If financials catch rotation, what's the move? Do we buy some of these battered banks, or do we buy the strongest stocks in the financial sector? I'd rather be buying the strongest stocks. Ares is definitely one of them. Wellington Management's in this one. I would love to make money in a trade with Wellington Management. Love those guys. Shout out. Friend of ours from Wellington was on the morning show just last Friday. So 13G in this one. So we have a passive position for Wellington, about 10%. That was filed last year. So we're above 90 here, maybe 90 and a quarter. We could be long Aries with a target of 113. Stock's trading at all-time highs, right? How many financials can you say that about right now? These are the kinds of names we want to be buying. XLF and financials as a sector are going to experience some rotation. Again, we want to be in these winners. Same thesis we just discussed with something like PGTI. If industrials and small caps catch that rotation, right? It's being the best ones. Vertiv Holdings, VRT, already hit target 1. Well on its way now, it looks like back to the highs from last year, 2021. So the next target would be 2870. 2860, 2870. We're above 2050. We could be long, but this one, boy, this one really moves. This one really moves. Trading around 2250 today. Do want it as close to about 2050 as possible, but the risk reward is fine here. It's still about 3-1. There's better setups in this. Ecolab, ECL, it's just starting to go. Looks good. That 200-day curling up here. Let's see the chemical stock. Let's see what momentum overbought, confirming these new highs, confirming the base breakout here. I like this above 177. Looks pretty good. First target 197. That's it, guys. As always, if you have any questions, shoot them over to info@allstarcharts.com. I'm going to check the chat really quickly before we get out of here. Fred. Hi, Fred. An S&B spaghetti chart. What's the difference between 1 and 4? Yeah, don't get bogged down in this. Probably shouldn't have included all these indicators. One is that the 200-day average is sloping higher on absolute terms. Okay, so that would be this here in the example of Uber, right? This line here sloping up. That's why it's color-coded green. And 4 would be that the 200-day moving average is sloping up on relative terms. So that would be this one down here, Fred. I hope that answers that for you, right? Because what that's telling us is that trend is now higher for this stock on both absolute terms, and the trend is now higher in relative terms. So not only do we expect higher prices in the future and to make money, we also expect to outperform the broader market, or outperform our alternatives, outperform the other things we could have bought with that capital. Always important. What car is it? Oh, that's your name. I thought that was the question. Adobe is getting buzz. Yeah, it is. I think Patrick was talking about this one in the Buzz Report a few weeks ago, right? Stage 2 breakout. Sure. Stage guy. Love it. Carvana. Listen, Carvana looks like it's going. These heavily shorted stocks are working. So not exactly one for me. Listen, I made a good trade on a heavily shorted stock earlier this year. Then I made a bad trade on a heavily shorted stock that ended up going to zero with Silvergate. I didn't go to zero. We use risk management, but Silvergate went to zero. So I'm going to stay away. I'll leave Carvana for you guys this time. But these shorted stocks are working. Things like Beyond Meat are coming across my radar. Find myself looking up the short interest a lot these days when I'm flipping through charts. Asking for the guys to send over the list like every other day of the most heavily shorted stocks. So yeah, and I think we get new data very soon. It's crazy we have to wait 2 weeks for this, the short interest data. I think that's changing, but we should get new data soon, because the dates I'm seeing quoted at these data providers is May 31st right now. Jonathan, thanks, Steve. NVIDIA flag a buy here. I mean, what can I say? I made this mistake earlier this year telling somebody that they could probably get NVIDIA at lower prices. Man, has this stock made me eat my words. I feel so bad. Look, you don't want to bet against a stock like this. These stocks, whether it's NVIDIA or Apple or, AMD is a good example now too. The way they're correcting after just monster moves is so constructive. Like, they're not going down. If you look at NVIDIA, it gapped up on earnings May 25th. It never even revisited its lows from that day, from its earnings gap day over the past few weeks, right? Never even got a retest. We were looking at the old highs in NVIDIA, the 2021 highs, saying, stock could move back to that level, do a little backing and filling. It wouldn't be so bad, right? Definitely be a buyer there. Not even close. We didn't even get a retest of the gap up lows from the earnings day. So yeah, NVIDIA can't be a seller. So I guess you got to be a buyer, right? If you want to be in the stock. So I would, 408, 410 here. We're above 410. This flag's going. Our next fib target is 470.50. So, not the biggest profit potential, but not nothing. Did I get everybody's questions? Think so. All right, guys, we got more videos. I'll be on with Sean in a few hours, doing a little podcast or a show with some buddies, Phil Perlman and Howard Lindzen later. So I will be around, and JC and I will be back tomorrow morning on the morning show. I will talk to you guys about the Hot Corner Live strategy again this time next week. As always, thank you everybody for joining. We'll see you tomorrow.